Are you curious about what's happening in the stock market today? Well, strap in for an exciting ride. The stock market has been something akin to a roller coaster of late, with ups, downs, twists and turns driven by the ever-present uncertainty over interest rates. This turbulence has left many investors with a sense of unease, eagerly awaiting some form of stability. But today we're seeing a glimmer of hope on the horizon. Federal Reserve officials have dropped some intriguing hints that have the market buzzing with anticipation. They've suggested they might be considering a pause in interest rate hikes, a development that could bring some much-needed relief to the market. This potential pause in rate hikes is more than just a hint. It's a beacon of hope for investors who've been grappling with the ripples caused by the uncertainty over interest rates. These hints of a potential rate relief have sparked a resurgence in stock prices, like a phoenix rising from the ashes. The stock market is a complex beast, reflecting the hopes, fears, and expectations of investors. And right now it's clear that the market is responding positively to the Fed's hints. There's a palpable sense of optimism in the air, with stocks showing an upward trajectory. But why is this hint from the Federal Reserve officials so important? Well, their decisions have a significant impact on the overall market sentiment. A single statement can cause a seismic shift, influencing investors' decisions and driving up stock prices. This potential shift in policy from the Fed has instilled a newfound confidence in the market. Investors are keeping a close eye on these developments, knowing that their investment decisions hinge on the actions and statements of these officials. In conclusion, a positive indication from the Fed can create a ripple effect, influencing investors' decisions and driving up stock prices. So, as we move forward, it's crucial to keep our eyes on the Fed. After all, the state of the stock market today may just be a hint of what's to come tomorrow. With this potential rate relief, what could be the impact on various sectors? This is the question on everyone's mind as Federal Reserve officials drop hints of a possible pause in raising interest rates. The potential impact of this rate relief could be significant, especially for sectors that are sensitive to interest rates. Industries such as housing, construction, and consumer goods are particularly vulnerable to fluctuations in borrowing costs. When interest rates are high, the cost of borrowing increases, making it more expensive for companies in these sectors to finance their operations. This can lead to a slowdown in growth and a decrease in stock prices. However, with the prospect of rate relief on the horizon, these sectors could see a boost. Lower borrowing costs could stimulate growth by making it more affordable for companies to finance their operations. This could lead to increased production, higher profits, and ultimately a rise in stock prices. Let's take the housing sector as an example. When interest rates are low, mortgages become more affordable. This can stimulate demand for homes, leading to increased construction and higher profits for companies in the housing sector. Similarly, in the consumer goods sector, lower interest rates can make it more affordable for consumers to finance large purchases, driving up demand and boosting profits for companies in this sector. But it's not just these sectors that could benefit. The potential rate relief could also have a broader impact on the overall stock market. Lower interest rates can stimulate economic activity, leading to increased corporate profits and a rise in stock prices. This could lead to a resurgence in the stock market, benefiting investors across the board. However, it's important to remember that these are just potential impacts. The actual impact will depend on a variety of factors, including the magnitude of the rate relief and the reaction of the market. Monitoring the statements and actions of Federal Reserve officials will be crucial in making smart investment decisions during these times. So stay informed, keep an eye on the market, and be ready to adjust your investment strategy as the situation evolves. Now, let's shift our focus to the top gainers and losers of the day. Today's stock market has seen a variety of performers. On the winning side, we have companies from the housing and construction sectors. These industries have been particularly buoyant, thanks in part to the potential rate relief. Lower interest rates could lead to an increase in borrowing, which in turn could stimulate growth in these sectors. One of the top gainers of the day is the construction conglomerate, Build It Big. They've experienced a significant bump in their stock price owing to their diversified portfolio and their recent announcement of an ambitious expansion plan. It's clear that the market has responded positively to this news, reflecting investor confidence in the company's future prospects. On the other end of the spectrum, we have the day's losers. The tech sector has faced some headwinds today, with several big-name companies seeing a dip in their stock prices. Leading the pack of underperformers is the tech giant ByteMaster. Despite a strong performance in the previous quarter, ByteMaster's stock price took a hit today. This can be attributed to a recent data privacy concern that has raised eyebrows among investors. Meanwhile, the energy sector had a mixed day. While some companies managed to ride the wave of positive market sentiment, others fell short. For instance, Green Power Solutions, a leading renewable energy company, saw a significant drop in its stock price. This is likely due to the company's recent announcement about delays in their upcoming project. It's important to note that the market is influenced by a variety of factors, from Federal Reserve policies and global economic trends to company-specific news and investor sentiment. As an investor, staying abreast of these developments is key to understanding the market's movements and making informed investment decisions. These market movements showcase the dynamic nature of the stock market and the importance of staying informed. Our expert analysts are here to give their insights on these developments. They're keeping a keen eye on the Federal Reserve's signals and the subsequent market reactions. The potential for rate relief is a significant development, and it's causing quite a stir in the financial world. According to our experts, this could be a game changer for sectors that are highly sensitive to interest rates. Industries like housing, construction, and consumer goods might witness a surge as borrowing costs potentially decrease. Our seasoned analysts also remind us that these developments could lead to a ripple effect. A positive signal from the Federal Reserve could trigger a domino effect, influencing investor sentiment and driving up stock prices across various sectors. But it's not just about the potential gains. Our experts underscore the need for caution. While this news is indeed exciting, they remind us that the market is unpredictable and often influenced by a myriad of factors. Therefore, maintaining a balanced portfolio is crucial. The potential rate relief may also shift the focus towards growth stocks. These stocks, often from technology and innovative sectors, might see a boost as lower interest rates can make their future earnings more valuable. However, our analysts advise keeping a close eye on these stocks as they can be volatile. In addition, experts suggest that value stocks, those that are considered undervalued compared to their intrinsic value, might offer a safer haven in times of market volatility. These stocks often have solid fundamentals and can provide steady returns over time. The potential for rate relief is opening up new avenues for investors. Our analysts believe that savvy investors who stay informed and adapt to these developments stand to benefit the most. So as we navigate these interesting times, it's essential to stay updated with the latest market news. Our analysts will continue to provide expert insights to help you understand these complex market dynamics. Remember, informed decisions are the key to maximizing your investment potential. As an investor, how can you navigate these market changes? That's the million-dollar question, isn't it? Well, here are some tips to help you steer your investments in the right direction. The first tip is to stay informed. Knowledge is power, especially in the world of investments. Keep a close eye on the Federal Reserve officials' statements and actions. These will give you clues about the future direction of interest rates. A potential rate relief could mean a resurgence in certain sectors, so watch out for those opportunities. Secondly, diversification is key. It's the tried and true method for reducing risk in your investment portfolio. Spread your investments across different sectors. This way, if one sector experiences a downturn, others may be on the rise, balancing out your potential losses. Next, consider long-term investment strategies. The stock market is notoriously volatile in the short term, but over the long run, it has proven to be a profitable investment avenue. So don't let short-term market fluctuations deter you. Stick to your long-term investment plan. Also, be patient. Patience is a virtue in investing. It takes time for investments to grow and for market trends to play out. Don't rush into or out of investments based on temporary market conditions. Lastly, remember that it's okay to seek professional advice. If you're unsure about how to navigate the market changes, consider consulting a financial advisor. They can provide expert guidance tailored to your specific investment goals and risk tolerance. To sum up, in the face of market changes, stay informed, diversify your investments, think long-term, be patient, and don't hesitate to seek professional advice. Follow these tips and you'll be well equipped to navigate the twists and turns of the investment landscape. Stay ahead of the game and make informed decisions to maximize your investment potential. To summarize the key points discussed today, we've delved into the current state of the stock market and the potential impact of rate relief hinted at by Federal Reserve officials. This potential shift in policy has sent waves of optimism through the market, leading to a resurgence in stock prices. It's been a roller coaster ride for investors, but this latest development brings a much-needed breath of fresh air. We've also highlighted the day's top gainers and losers, providing a snapshot of the market's performance. It's a dynamic landscape out there, and staying informed about these shifts is vital for any savvy investor. Our expert analysts have shared their insights, dissecting the implications of the Fed's potential decision on various sectors. Industries sensitive to interest rates, such as housing, construction, and consumer goods, might see a boost as borrowing costs could potentially decrease. These insights shed light on the ripple effect of the Fed's decisions, reminding us that the actions of a few can influence the financial futures of many. We've also shared some valuable investment tips, emphasizing the importance of staying informed about the statements and actions of Federal Reserve officials. In a world where information is king, staying abreast of the latest developments is crucial for making smart investment decisions. Remember, the stock market is a complex ecosystem, and understanding its nuances can be the difference between success and failure. Being proactive, staying informed, and making calculated decisions are the hallmarks of a successful investor. So, as we wrap up today's daily market update, we hope you found our analysis and insights informative and valuable. Our aim is to help you navigate the ever-changing landscape of the stock market and to empower you to make informed investment decisions. Thank you for watching and stay tuned for more exciting updates.